See now. Okay, thanks.
Yeah.
Now,
Yeah.
as we are talking about this thing, financial inclusion. Now, what? Changing the slide. Can I change the slide? No, I can't.
Yeah.
Even that, perhaps you have to do. Yeah. Now, what are the objectives of financial inclusion that we are talking about? It's very clear that financial inclusion aims at the weakest of the people in the financial chain, and it wants to give them a chance to change their economic circumstance and lead a better life. That is at the individual level. At the national level, financial inclusion holds out the promise of prosperity of the nation as a whole. Now, how these two objectives are fulfilled? They are fulfilled by a clutch of instruments. How do I change the screen? I can't do anything because it is.
So we will change it. You can just say next. We will change it.
Okay, fine. Now, how does financial inclusion help? It helps the beneficiary to get access to microcredit, a small scale financing, which helps the people to generate income, to improve their standard of living, and at the same time, also income streams of various kinds. Now, once they have income streams, then they are very well placed to channelize their income to consumption, to instruments for investment, and for creating assets, and also for financial saving. So all the plethora of financial activities come into picture once you have that initial access to microcredit. Another interesting part of financial inclusion is access to insurance. That is very important in a context of the fact that it gives them like crop insurance. It's very vital at the rural level for the farmers in particular. Similarly, life insurance and insurance, home insurance, and many other things are useful at the level of the poorest of the poor. And last but not the least, the benefits of financial inclusion don't remain confined to one generation alone. They are transmitted from one generation to the next. One of the ways of doing that is by way of providing for the education of the children, of the beneficiaries. Next, please. Now, in this background, now we need to see how financial inclusion has worked out in our country. It has been talked about for a very long time, as I said earlier, but how it has worked out. It has worked out very well in the last few years, as you can see from this chart, that in 7 years time frame between 2011 and 2018, the number of bank accounts under Jan Dhan, that was doubled. Percentage wise, that was doubled. In 2011, we had just 40% of adult Indians owning Jan Dhan account, and by 2018, the percentage had jumped to 80. The number of accounts had more than doubled because it is just a proportion of the population. So obviously, the increase in number of accounts was much more. Next, please. Now, this increase in accounts has benefited, has been brought about, or rather it has resulted into a lot of things. Like what were the several financial inclusion initiatives that were implemented to achieve this? The most prominent and the most famous kind was Aadhaar, a biometric database that provides unique identity, that provides know your customer, very authentic system of know your customer under the Prevention of Money Laundering Act, which is very important for establishing the identity of the beneficiary for whom the financial benefits are meant. Then the second part was again a major and a highly successful scheme, the first one of its kind perhaps in the entire world, under Pradhan Mantri Jan Dhan Yojana. Now, this Yojana has been in work for quite some time, but in the last 5-6 years, it has virtually covered 80% of the adult Indian population, which was not covered heretofore. Then the direct benefit transfer, like crediting the account of the beneficiary directly, that is also a financial instrument being used. And you would recall that in the recent COVID-19, scare, in a lot of accounts, the government they credited 500 rupees. You remember in the early stages when people were out of job, and a lot of them were labor who were moving from one place to another. So this DBT came into picture in a big way at that time. And of course, it continues to be very critical for the lowest of the lower category of beneficiaries. Then digital payment infrastructure called BHIM is very critical because non-cash, the more you go towards the digital payment, various instruments, BHIM is one of them. There are several private ventures also like Paytm and others. And then a lot of other initiatives like internet banking through that also a methodology for digital payment that can be used. Another major success in India has been that of RuPay brand. Now earlier, before RuPay came into picture, Visa and MasterCard used to rule the roost as far as card payments was concerned in the country. Now, it is very gratifying for all of us in India that today RuPay commands 50% market share in the entire debit card market in the country. And there are more than 24 crore RuPay debit cards which are operational. Banking correspondence is the next financial instrument that has been used for quite some time in India now with a very high degree of success. And they are the last mile connectivity to the poorest of the poor. Now, they are the only set of people because even bank branches can't reach the remotest of the remote corners of the country. But banking correspondence representing the bank and having a modicum of basic banking knowledge and with some instrument like a basic POS terminal machine they carry, they can help the customers. And white label ATMs is another instrument that is being used. They are not of any particular bank. They are in place for assisting whichever bank wants to use them for payment purposes. Next, please. Next screen, please. Yeah. Now, this is what that has been done at the level of the at the country level or the national level. Now, besides that, there are several schemes. Financial models which have been used by the banks, various banks in a big way to promote financial inclusion, promote the prosperity of the poorest of the poor lot. Now, the most obvious and the most traditional one is building investment credit portfolio with loans to the farmers and other people in the rural sector, like in the dairy, in the poultry, in the fisheries, all these things, and of course, agriculture. By way of crop loan, tractor loan and all that. All these help in increasing the farmer income, their daily cash flow, which makes them much more better placed for meeting their day-to-day requirements. Government of India also pitches in by way of interest subvention. Now there is a concession in interest given to people in the rural sector who are in predetermined or other specified activities. They get an interest rate concession. The next one is the self-help group concept. This has been in use in India for quite some time, and it is of tremendous use in spreading the banking habit amongst the poorest of the poor, and especially among ladies. This is a very popular instrument used for mobilizing the ladies or bringing them in the fold of the financial inclusion. Another instrument which has started getting used by the banks recently is buying pools of agriculture assets from microfinance institutions and NBFCs. Now here what happens that lending institutions take over the loans of microfinance institutions or NBFCs for various reasons. Their loans are not doing too well, or the rate of interest they are charging is too high, because of which the beneficiaries are not benefiting in a proper way. So if those loans are taken over by bigger organizations with more financial muscle power, then they are better placed to serve the interest of the poorest of the poor. So that is also working towards improving the financial inclusion. Next, please. Another which is being used quite often is Kisan Mela and Kisan Milan for facilitating loyal and regular borrowers, for encouraging them to maintain their strong repayment behavior. And because, NPAs have been a big threat. So that is one of the strategies for negotiating the threat of non-performing assets in the system. And this also helps in attracting, these Kisan Melas also help in attracting new customers to the fold of the banks for financing. And all these things are towards improving the financial inclusion. Retail asset credit centers, they have become very popular nowadays. There was centralized processing of small loan applications, and that leads to faster turnaround time and also better quality of sanction and better satisfaction for the customers. Another recent instrument which is now being used by some of the banks is organizational restructuring. Changing their organizational structure to come up with instruments which make financial and micro market much more area in the banking network. Then digital banking, of course, there has been in place for quite some time. ATMs, internet banking, and mobile banking, and all they have been in place. And with the help of banking correspondents, these are being given a further impetus for exploring financial inclusion. Next, please. Then some more models that are being used by the banks are use of technology to extend financial services to the doorsteps of unbanked customers, which I said earlier about banking correspondent. They reach out to the customers in the farthest corners of the country and to their doorsteps and extend them basic banking facilities like withdrawal and deposit of the money and all that. Another interesting instrument used in several organizations, banks, is Rural Self-Employment Training Institutes, RCTs. These are set up as a social change agent for empowering rural youth to achieve sustainable livelihood through skill development and training. Then financial literacy. And a fair number of financial literacy centers have been set up in various parts of the country to improve the financial awareness of the people in the countryside about availability of financial instruments and facilities for lifestyle. Then all these things together help in improving the employment opportunities and wealth creation. Next, please. Now, while all these instruments are there in place, the fact remains that there are several challenges that are still there for us to, because even with all these efforts and all these instruments, perhaps there is a need for a much more focused, much larger involvement, and more strategies need to be thought out for meeting the challenges of financial inclusion. And Brigadier Williams was also talking about it, the reskilling requirements in a big way. I'm also mentioning to that. There are 4 dimensions of reskilling that we need to focus on in particular. The first one is a shift in our education system. It is being talked about quite a lot for quite some time, but it is still to be implemented, that the focus of our educational system has to shift from conceptual knowledge to tangible, employable skills. The skill development has to be the primary focus, and conceptual knowledge, yes, it is important, but to a certain extent only. Secondly, more jobs in formal sector than informal. Now, formal sector would facilitate a better work environment for the poorest of the poor, and it will make them aware about their rights. And whereas in informal sector, chances of exploitation are there. So it is always desirable and necessary that we make more and more jobs available in formal sector rather than in informal sector. Reducing regional disparities is another big challenge for employment opportunities. Yes, I mean, that's why a lot of migrant laborers had to go to big places like Mumbai and Delhi and other, because they didn't have adequate employment opportunities in their own place in the countryside. So even that is a big challenge for all of us. if we want to improve the financial inclusion all over the country. And last but not the least, proportion of working women in workforce must go up. That is improving, no doubt, but still their numbers are too little in comparison to the overall numbers of working population. So that proportion has also to go up. Next, please. Next screen, please. This is about the reskilling part. The next part is about socio-economic inclusion. The next challenge that we face, a big challenge we face about socio-economic inclusion. And there are three barriers, or as we call it, access barriers to it, that have to be negotiated, that have to be met as we go forward. A very important one is about constrained physical connectivity. We have the road network in the country has definitely improved quite a bit, but still we lack all-weather roads and uninterrupted power supply in the countryside, in the rural sector in particular. So that has to be focused on. The next big challenge is about digital connectivity. Without that, perhaps it's very difficult to take things forward, and digitization of the economy would be very difficult without digital connectivity in big time, especially in the rural sector, by strategies like use of broadband coverage through fiber optic technology. So that has to be looked at. And third, and perhaps again a very critical part is this. Yes, there has been considerable improvement in financial inclusion by opening of Jan Dhan accounts, but still the fact remains that almost 90 to 20 crores of adult Indians are still outside formal banking network. It is a very large proportion. It's a very large number, and we have to have strategies for bringing them in the fold of the financial inclusion. Next. Now that the direction, the next steps that we need to take suggest themselves in the light of the challenges that we faced just now. Perhaps one of the most immediate challenges for banks in particular, because they are the bodies for financial help to the farmers and other rural people, is financial institutions must understand the market and structure financial products accordingly. The traditional way of a standard product structure for all people won't do. We have to have customized, specialized products for different sectors, for different parts of the country. Like, for example, a tractor loan repayment. Traditionally, classically, it is a monthly repayment or a quarterly repayment. Now that has to be seasonal. Yes, it has become seasonal in many parts of the country, but then that has to become seasonal as a rule, so that the income stream and the payment on account of tractor loan repayment are synchronized with each other. Another challenge would be, next step would be widespread distribution network and local recruitment, so that employees are familiar with local cultural and economic nuances. Now, again, this is important in the sense that the institutions are better placed to meet the needs and expectations and aspirations of the people at the lowest level of economic and social ladder. For that, the local recruitment and widespread distribution network through strategies like banking correspondent and all has to be explored much more aggressively for fulfilling the needs of financial inclusion. I think that's all. Thank you.